Buffett's successor is making huge moves. Here's what he's buying next. Buffett's not calling the shots anymore, and his successor is making billion-dollar moves under everyone's radar. What he's buying might surprise you, and it could change Berkshire forever. Warren Buffett built Berkshire Hathaway into a $900 billion empire by being smart, patient, and just a little bit quirky. But here's something most investors don't realize. Buffett isn't fully in charge anymore. His successor, Greg Abel, has quietly started shaping the future of Berkshire, and the moves he's making now will define the next 50 years of the company. So what's he buying? Why those companies? And what does it mean for you? Especially if you're invested in Berkshire or just looking for clues from one of the world's sharpest investors. Let's break it all down with stories, numbers, and decisions that might just change the investing world. To understand where Berkshire is going, we first need to look at who Greg Abel is, the quiet heir to a $900 billion throne. Let's rewind a bit. Greg Abel didn't grow up in the spotlight. He wasn't born with a silver spoon, and he didn't make headlines by being on crypto or NFTs. Born in Edmonton, Canada in 1962, studied commerce at the University of Alberta, started his career at PricewaterhouseCoopers as an accountant, joined a tiny energy company in the 90s called Cal Energy. That's where Buffett comes in. In 1999, Berkshire Hathaway acquired Mid-American Energy, which was the parent of Cal Energy, and that's where Abel really proved himself. Over the next 2 decades, Abel transformed Mid-American into Berkshire Hathaway Energy, or BHE, now one of the most powerful utility companies in North America. Buffett noticed. In fact, in 2021, Buffett said this about Abel: "Greg is the guy, if something happened to me tonight, Greg would take over tomorrow morning." And he wasn't kidding. In recent years, especially after Charlie Munger passed in 2023, Abel's role has expanded fast. He now oversees all non-insurance operations at Berkshire, which includes over 60 subsidiaries like BNSF Railway, Dairy Queen, and See's Candies. But unlike Buffett, who loves public markets, Abel is laser-focused on operating businesses, particularly in energy, industrials, and infrastructure. Let's dig into what he's buying and what that says about the Berkshire of tomorrow. 1. Energy that lasts, the renewable gamble. Let's talk about Berkshire Hathaway Energy, because this is where Abel cut his teeth, and it's also where he's doubling down. Here's what most people don't realize. BHE is a massive business, pulling in over $25 billion in annual revenue, and under Abel, it's been shifting aggressively toward renewables. Key investments: $22 billion slated for wind, solar, and battery storage through 2030. One of the largest wind fleets in the U.S., mostly in Iowa. Building out transmission networks to connect rural clean energy to urban demand. But here's where it gets interesting. Abel's team isn't just betting on green energy because it's trendy. They're doing it because the Inflation Reduction Act offers huge tax credits for renewable infrastructure. Long-term power purchase agreements equal stable, predictable cash flow. Demand is surging as states push toward 100% renewable mandates. Utilities are boring until they're not. And in today's unstable world, they're basically legal monopolies with government backing. Abel sees the moat, and he's building one around Berkshire that'll last decades. Number 2, carbon capture, oil, and the smartest dirty play. Wait, didn't we just talk about clean energy? Yep, but that doesn't mean Abel is ignoring fossil fuels. In fact, he's doubling down with a twist. Occidental Petroleum. Berkshire now owns nearly 30% of Occidental Petroleum. That's over $16 billion invested. Abel was one of the key voices backing this move. So why invest in an oil company during a green energy transition? Because Occidental is betting big on carbon capture and storage, CCS, tech that sucks carbon out of the air and locks it underground. And the U.S. government is giving away massive tax breaks for every ton of CO2 captured. This is how Abel thinks. Play both sides, hedge your bets, own the problem and the solution. Oil makes money now, CCS protects the future. 3. The backbone of America: railroads, truck stops, and grids. While the world obsessed over AI and flying cars, Abel was focused on something more grounded: moving stuff. Let's talk infrastructure. BNSF Railway. Berkshire's railroads move over 10 million carloads per year. It's one of the largest freight networks in the U.S., generates over $5 billion in annual profit. Abel is pouring money into modernization, upgrading locomotives to cleaner fuels, improving rail logistics with real-time data, expanding into freight terminals and smart intermodal hubs. Now add in Pilot Flying J, the largest chain of truck stops in North America. Over 750 locations serving millions of drivers. Essential as EV trucks slowly enter the market, Abel is already investing in EV charging networks at those stations. Abel sees the long game. If you can control how goods move, you can control a big chunk of the economy. And while everyone else is looking to the skies, he's betting on the ground beneath their feet. 4. A global push: utilities abroad. Another area where Abel is steering the ship differently than Buffett: international expansion. Buffett has always favored U.S.-based companies. Abel, not so much. Under his leadership, Berkshire now owns Northern Power Grid in the UK, investing in solar storage projects in Australia, looking at hydroelectric opportunities in Latin America. Why? Because U.S. infrastructure is crowded and expensive. But in places like Australia, they're still building the future, and Berkshire can be early. These projects aren't splashy, but they're insanely profitable over 25 to 30-year timelines. Abel knows that infrastructure is like real estate: boring at first glance, but unstoppable if you pick the right location. But all of this raises a huge question. Is Greg Abel too conservative for this new economy? Investors are asking, where's the AI exposure? Why isn't Berkshire buying into chip makers, robotics, or data centers? Will this slow and steady style work when everyone else is sprinting? Some critics think Abel is over-indexing on safe bets, missing out on massive upside. They argue if Berkshire doesn't evolve fast enough, it'll get left behind. Buffett himself did buy Apple in a big way. What if Abel is too cautious to take risk like that again? But here's the counterpoint, and it's powerful. When the dot-com bubble crashed in 2000, who survived? Not Pets.com, not Webvan, but good old boring Coca-Cola, Procter & Gamble, and Geico. Abel isn't trying to be flashy, he's trying to build anti-fragile businesses, ones that survive inflation, interest, rate swings, political chaos, even pandemics. Let's talk numbers. In 2023, Berkshire's operating earnings hit a record $37.4 billion. Nearly half of that came from infrastructure, energy, and industrial businesses, the stuff Abel manages. Compare that to the tech-heavy portfolios that swung wildly based on one earning report. Abel's focus is boring on purpose because boring makes money. He's not here to ride the waves, he's here to build docks. At the 2024 Berkshire shareholder meeting, all eyes were on Greg Abel. It was the first one since Charlie Munger's passing, and Buffett took a noticeable step back. Abel didn't try to steal the spotlight, but he did drop one unforgettable line: "We don't chase trends, we build the roads they'll run on." That line hit home for a lot of long-term investors. He's not betting on the next big thing, he's betting on the foundations every next big thing will need. Energy to power it, roads to deliver it, data centers to store it, railroads to move it, infrastructure to sustain it. And that's exactly what Berkshire is buying. So what's Greg Abel really planning? He's not trying to be Buffett 2.0. He's building a new era of Berkshire, one grounded in utilities, infrastructure, and transportation, focused on clean energy and carbon capture, quietly expanding into global markets. Built for resilience, not hype. In a world obsessed with fast money, Abel is doubling down on forever money, the kind that compounds quietly while others chase noise. And if you're wondering what to watch next, watch what Abel buys. Because when he makes a move, it's not just a trade, it's a signal. If you want to grow your money smarter, the next video's got what you need. Tap it now.